Hey everyone, welcome back to another episode of the 6-5 podcast, episode 181, Mr. Moorhead. I'm here with my bestie. How are you doing today? It's Friday.
Doing well. I woke up this morning. It wasn't 100. It's like in the 70s this morning.
No, it
Cold
wasn't.
front's coming through. Had to put a sweater on.
Don't lie.
Ugh, so chilly.
What
But
is it going to be, like 99?
yeah, I think we're gonna. Well, I think we broke the 3-digit thing last week or this week for one day, but I don't even notice it anymore. I really don't. In
Yeah,
fact,
my
I like
wife
to go out.
informed
Yeah,
me. Well, I was out of town one day this week. It was like 99.
yeah.
And so that's like some sort of improvement. It also drizzled, she said, for about 5 minutes. Yeah, I don't know.
You sure that
Something
wasn't
about
your?
getting old and
Sure that wasn't your sprinkler system, your hydration system around your back patio?
I don't know. We've been on boil orders a few times here just because they're the water. I don't know. Lake Travis, it's so low. I don't know. There's something about getting old and talking about the weather. It's very comforting. But I mean, it literally, like, there was like a weather map at one time this week, and it was like this big circle of rain, and it literally was like a hugging Texas. So there was rain everywhere around Texas, and then there was this big spot of no rain. It's like where rain goes to die. I did not realize I moved to the desert. We apparently did move to the desert, but we're not outfitted to be the desert. So, it's been a bit of an interesting thing. But by the way, it has happened like 3 or 4 times in the last few decades here. This isn't. Anyway, I digress. Busy week this week, Pat. We've got a bunch of earnings to talk about. We were out at VMware Explore, did some work and some videos out there. Finally, an actual filing, a real IPO for a big, interesting, and exciting company. And we're going to talk about all that today. But before we do that, I do have to do the old disclaimer. This show is for information and entertainment purposes only. And while we will be talking about publicly traded companies, please do not take anything we say as investment advice. Mr. Moorhead, there was one earnings this quarter that everybody was at the edge of their seat waiting for. NVIDIA. Was it as big as everyone thought, or was it a big old disappointment?
Yeah, I think we all probably know the answer to that. I mean, you can't swing a cat. I mean, even tabloids were covering NVIDIA earnings yesterday. But yeah, I mean, they crushed it, right? And if I compare it to what I thought it would be, it was actually a little bit less of a beat than I had thought. I had thought for sure it'd be around, that 5 billion mark. But the guide was exactly what I thought it would be, which was, I had said in between kind of 2 to 3. But they crushed it. And quite frankly, I want to spend less of my time fawning over this. And by the way, for the record, everybody, there was a company that had as big a beat before, and the company is called Cisco. Back in .com 1.0, Cisco crushed it because they were the backbone of the internet. So this is not unprecedented. Cisco did exactly this. In fact, they did it twice. But I have 2 questions. First of all, how long does it last? And with nearly zero competition to NVIDIA in the Western worlds, who comes in as competition and how? So on the how long does it last? So SaaS is a done deal. And listen, I've seen enough from Microsoft, Salesforce, Oracle Fusion to know this is going to be big, and those companies are going to be able to make incremental profits on that. So this won't just die at some point on the build out. If you think about how many SaaS applications have to be enabled and the amount of big iron that's going to be required to do this, this is going to go on for a long time. The second thing is SaaS enterprises will see what's going on in SaaS, and it's going to force them to write or augment or GAI infuse their own applications. And this is going to drive IaaS, and this is going to drive the on-prem guys. So AWS, Azure, OCI, GCP, on-prem, if they can get GPUs, the Dells, the HPEs. IBM is a company that does both, right? They have an IBM cloud, GAI training in the public cloud, but they also enable many of these opportunities on-prem. And let's not forget about Red Hat. So now let me talk about competition. So how long will it last? I mean, I'm giving this at least a year, at least a year. I'm extending that. I thought, okay, I think this can last about 6 months longer, but I think we're going to go out to a year. So let's talk about competition. Nobody likes one strong player in the market. And while 30 years ago, that was an impossibility, today you have people like Google with Google Search. You have close to, 70, 80% market share in search. You have Apple, who has a dominant share of smartphone profits. I think it's 90%. And the other 10% is Samsung. But there's two ways that I suggest everybody look at this. There's the hardware, and then there's the software, okay, which is really the big moat here. I want to see some proof of life on the hardware. The hardware is not a slam dunk, even though I do think companies like Intel and AMD and even upstarts like Grok have some competitive things out there in the market. I do think that this is going to be continue to be a software thing. And these companies can't do really anything on their own, right, to get there. So I would expect hyperscalers, open source software companies, networking companies, hardware accelerator companies banding together to make this happen on their own. What I know for certain is that no one likes one player who's likely making 1,000 points of gross margin on the cards, 70% margins on the boxes, where OEMs make 20 points. So in the end, I'm going to call this, I think in the first half of 2025, both AMD and Intel will be 10% players of the accelerator market. That's it. That's all.
There you go. There you go. Listen, you did make a good call on Cisco. I would say this is largely unparalleled. At the end of last quarter, they came in at 7.5. They guided to 11. They delivered 13.5. They guided to 16, probably going to deliver 18, because companies don't make big upward guidances like this if they don't believe emphatically that they're going to hit them. So when they came out last quarter at 11, I said they've got 11 in the bag. They probably had 11 in orders sitting in their pocket at that moment in time. And then it was just a matter of how much more supply, how much more could they ship. Pat, it's COWOS. Now we just got to figure out how to get TSMC to create more yield, and then NVIDIA can sell even more. Do you like that I knew that?
No, it's good and interesting.
I don't know. Everybody can look it up.
Well, it's not even just about wafers either. It's about CoWoS and
that's what I said. COWOS. CoWoS.
Yeah.
Oh, yeah. So I was actually saying smart stuff in case everybody didn't know I'm smart.
Dan,
but anyways,
all I know is there's only one guy whose head is bigger than the stage in New York. I mean, literally, go check out Dan's tweets. He did some pretty good victory laps for
yeah, I did
for his New York tour.
New York Times, Barron's, Wall Street Journal, Bloomberg, CNBC, got them all in less than 24 hours. But anyways, the thing about this is that's so interesting, though, is they're literally the only winner right now.
Yeah.
The only winner of this whole thing. And so the question is, one, does it last? I don't think we need to really review history. The only thing I'll say that we didn't mention was the gaming and automotive businesses were both actually up very, very, very slightly, but I don't think anyone even talked about it. You remember for 19 of the last 20 years, NVIDIA was a gaming company that had this kind of idea about accelerated computing, and then it sort of hit a perfect inflection. Automotive actually saw a little bit of a bump for the first time in a really long time. Now, all these things are AI drivers. I mean, what has NVIDIA done well? NVIDIA has done well is that they have every partnership on the planet right now. what else NVIDIA has done well is they understand, and you said this, Pat, about the software, is that how sticky it is.
Yeah.
And so by aligning itself right now with effectively, like, I think Jensen's been on tour. He's on the same schedule as we are. He now goes to every event and he shows up and he talks about whatever partnership. This week it was VMware, next week it'll probably be something at Google Cloud. Like, I'll be very surprised if we don't see Jensen in San Jose at Google Cloud or San Francisco next week, right?
I mean, Jensen stays at the lowest level Venetian room without a robe.
I don't know. I mean, maybe he's frugal. But
I think he is.
Some CEOs are people of the people. So anyways, that what I do want to just kind of reiterate or talk a little bit about is what you said is, I actually believe we have a problem if the competition doesn't arrive soon. So this runaway train of infrastructure, of cloud infrastructure being built all on NVIDIA with this sticky software ecosystem is going to make it, I think, every quarter that goes by that we don't have a healthier competitive ecosystem, it's going to be harder and harder to unwind. And so if you look at what it took to unwind the position that Intel had in server chips, Pat, it was basically Intel falling on its own sword. It happened on its own. It didn't happen based on any other company coming into market. There were blips, right? Opteron, when you were at AMD and you guys for a period of time started grabbing market share before you sort of self-imploded in that process. Yeah. But what I guess I'm saying is it wasn't until Intel on the PC chip, on the instruction sets, it wasn't really ARM's arrival that disrupted. It was Apple, for instance, finding that it could build a better chip and vertically integrate if it did it on its own. I mean, that's ultimately what happened. So it's just the AI market is going to grow, and our data shows it's going to grow considerably. It's going to get very large. Many vendors can build ARM-based instruction sets to combine with their GPUs, but the software is very sticky. And I hear a lot of things like, oh, it's very easy to move to ROCm. It's very easy to move to one API. It's very easy to move over to Grok's compiler, but people don't want to do it. People want to wait 18 months to buy something that they could get off the shelf right now, in some cases, from a competitor, because they want that ecosystem. The competition has a big job ahead of it to figure out how to undo that. That's the part they're going to have to figure out how to undo. I think we're going to talk about that a lot more here, Pat. Big quarter for NVIDIA. Congratulations. It did help prop up the whole market. The market actually, had they not had this big beat, I think yesterday would have been monumentally a disaster instead of just a small disaster.
Yeah, it was interesting to see AMD, Marvell, and Broadcom go up kind of in sympathetic. By the way, you know who always goes down when NVIDIA goes up?
Intel. Yeah, always.
Ouch.
Always. AMD got thwacked yesterday a bit too. The immediate, they went up, but on the fall, because like I said, but this is Fed speak. This is not even, I'm not even sure how much of it has to do with tech. It has to do with the Fed and inflation. So let's move over to Zoom. Pat, a couple of weeks ago, had an interesting conversation about what was going on at Zoom. They launched some generative capabilities. They talked about how they might use some data to improve their product, and people went off the rail. I think you and I finally communicated to the world that this was one of the biggest nothing burgers in a long time. I ate 12 or 13 nothing burgers, and then I went back and got back to work. But Zoom, has been one of these weird stories, because in the pandemic period of time, this stock ran, I'm talking about like the NVIDIA run, this stock ran to $500 at its peak, or somewhere right around 500. Yeah. It's trading now at like 60 to 70. So it literally went up like 10x and then went all the way back down. The question mark has been, does the company have the scale in a non-pandemic world where people actually do go to work and in remote ecosystems to grow the business? I think what's come out of it is a healthy, consistently growing, steady business, Pat, that will very likely never see its valuation return to what it achieved during the pandemic, but it is still growing. And so the fact is this is one of those really interesting things, is it's bigger than it was at the peak of the pandemic. So meaning this idea that remote work was what drove all the Zoom, but Zoom continues to grow. It's bigger than it was at the peak of the pandemic. They beat this quarter on top. They beat this quarter on bottom. Their growth it's steady. It's not massive, but they did, their income looks good. But what I liked the most about their numbers, Pat, was they're consistently growing enterprise, even if it's a small number. They're consistently growing their large customers, which is important. A lot of people kind of with the advent of Teams have kind of said, oh, Zoom's is the small business people. Zoom does the mid, Zoom gets the leftover. Yeah. Everything else goes to Teams, but they're winning big enterprises. And so, they're doing almost $4.5 billion a year in revenue, and they're winning large customers. Here's the thing, though, and I'll keep this kind of short on this one, Pat, that we all have to keep an eye on, though. Can Zoom become a platform? Does anybody care about Zoom beyond Zoom calling and Zoom videos? And that's the big challenge that the company really has to overcome. Is the market needs to believe that Zoom is an ecosystem for meeting, collaboration, integration. Right now, to do the Teams thing, Zoom needs productivity. Zoom needs some sort of developer platform, like a Power Platform. Zoom needs Dynamics or ERP. And the truth is, Zoom's never going to build all those things. So is there a market for best of class? Is there a market for a company that's going to say, look, we'll use infrastructure from one company, we'll use Salesforce for the other thing, we'll use Google for productivity, and we'll use Zoom for collaboration? Is there enough there, Pat? Or does Zoom ambitiously try to enter into those spaces? We've seen what Salesforce has done there. Hasn't worked out particularly well for the company. Salesforce has a great ecosystem, so I want to be very clear what I'm saying. But even with Slack and Salesforce, it's still been a hard run for them to fully find a way to sell people on that ecosystem. Salesforce tried to do it with Quip. Quip has really, I think, been a buried product. I don't think they're even really trying to focus on it. For Zoom, it's going to be even harder. So I think they really need to think partnership. They need to think ecosystem. They need to think best of class. And they need to really lean into making their world-class user experience stay meaningfully better than the competition, which will be hard.
I'm really impressed with senior management. If you think about what they had to go through the last 5 years, I mean, I don't know how a team like that even does this. I've been on roller coaster rides before. I saw my stock go from 90 to $1.50, $1.45 to 45 to 6. I mean, it's just, it is torrential, right? You're bringing on a ton of resources. You're laying off people. You're dealing with, just so much stuff. And you look at what Zoom did during, I'm not going to say the full word, during the P. By the way, we'll get deranked and we'll have some link at the bottom of our video. It drives me crazy, but it's impressive, right? And then, during the beginning of the P, there was the security scare, right? And Zoom made a ton of mistakes on the way it communicated and how it dealt with it. Now, when you're on monster growth, you're more prone to make mistakes, right? And then you look where you are, look where they are now. They're putting up some double digit numbers when their closest competitor is going in reverse, right? That, hasn't had a increase in, I think, 6 quarters. So, and then you map that against, let's say Microsoft, where they're essentially giving Teams away for free with the big enterprise licenses, right? They're bundling that in. David Sachs on the All In podcast loves to talk about, right? Like, where are the regulators when it comes to bundling all this stuff by these giant companies? And, right, let's go to the other challenge. Zoom's core value proposition is its simplicity, right? If you remember 3 years ago, why do you like Zoom? Why do you use Zoom? Oh, it's just simple. It just works, right? Compared to everything else. When you start adding features to it, the risk you run as a product leader is that it gets more difficult. I do like the pace that it is adding these features. They could add these capabilities and put them in our face, but I think it could backfire, right? You have to slowly pull these folks in who brought you to the show, who bought you for simplicity. I do think generative AI is an opportunity for them. If you look at all of the value that you can get from a meeting where it's essentially your note taker, it's your action item provider, it's your big moments, it determines what decisions were made. This is going to be gigantic. And I think that people are just underestimating the value of that. And yes, the generative AI nothing burger came and went, just like you and I said. It was essentially red meat for the press who needed something to write about. The funny part is a lot of other companies changed their talks, and it didn't get nearly the headlines as
it was like someone discovered this, Pat, and decided that this was the one time they were going to give a crap about.
The talk was updated in March, and everything came out 6 months later.
I mean, it's like, now go read the rest of them. Go read all the rest of the terms of services. Let's just make that a beat for somebody.
Yeah, everybody's quietly changing their talks, right? I guess TOS, terms of service, terms and conditions. But no, it's good. So I like the way that you characterize the company as consistent, moving forward. I'll end with, I really like the double-digit growth with the large customers, because that's where it's at, right? And think about how hard that is, right? When you're probably a Microsoft shop and Microsoft's giving teams away for you to go in and do that. So I didn't go to the analyst event that you did because I had a prior commitment, but I did talk to the company's chief operating officer and the chief product officer to try to figure out what was going on with the terms of service.
And there you have it. One down, 2016 more topics to go. Are you staying with us? All right, we're going to flash over. One of the sort of darlings of last quarter's momentum after NVIDIA was Marvell. Did that momentum continue, Mr. Moorhead? You like these setups? I'm practicing for when I become a host of it on.
Well, aren't you the world's best host, or is that JCal?
Well, I don't know, but in most things, the person that's the best, I've never heard Max Verstappen go on stage and say, I'm the best driver in the world.
Yeah.
He doesn't need to say he's the best driver in the world. He is the best driver in the world. And I just might happen to be the best moderator in the world, but I don't think I should have to say it.
Well, when they come up with a finish flag for world's greatest moderator, let me know. Okay. And I might even wave it for you as you.
Hey, is there a Grand Prix this weekend? I think there is.
There is. In fact, practice started. I've been half paying attention, half watching the race.
Is that what you're watching when I'm talking? Is that why you're looking over there?
Yeah, exactly. I mean, It's not about me, but, well, kind of about me. But no, let's talk about Marvell here. So they had a really good quarter, right? They had a beat and a beat, right? A slight beat on the top, a bigger beat on the bottom. And, they exceeded their guidance, their midpoint guidance. By the way, just can I get something off my chest? I hate that this stuff always get measured against expectations versus guidance. I really hate that. I get it, but the company will say, this is what I'm going to do. And expectations are different in the investment community. And they come in, they meet their guidance, they don't meet expectations, and they get buried. I really hate that. But they did beat on top line and bottom line. Small ones, right? On the top by about 0.7% and on the bottom by about 2%. But anyways, there was a lot of talk on quarter versus year on year, because quite frankly, year on year isn't pretty. So I like this strategy from just the point of view that says this is where it starts to turn around. There were some bright spots. right? I mean, data center revenue did grow 6% quarter on quarter. It was off 29% year over year, but you have to start somewhere. Enterprise networking was down quarter on quarter by 10%. And interestingly enough, down only 4% year on year. Carrier, right, which is a disaster zone for most, the company was only down 3%. The bright spot, as you might imagine, and this is not a small inconsequential business, was automotive. That was up 32%. Listen, the company's executing. There's nothing the company can do during this data center and enterprise and carrier lull. So I want to end this talking about what I consider as a bright future. So first of all, AI requires a ton of connectivity, and we're seeing increased spend there. And we did see some very good comments from Marvell on that. And as a percentage of the TAM, though, it can't make up for I'll call it general compute or the declines in enterprise and the data center. Automotive skyrocketing. Like I said, I mean, I can't believe how big that 25% increase for connectivity inside of the car. Finally, hey, copper's not dead, but the future is optical, and Marvell is a leader, if not the leader, in this space with things like PAM, coherent technologies. They recently released Orion, which I'm pretty sure is the industry's first 800 gig coherent optical DSP for pluggable modules. Now, I know that's a mouthful because folks like Broadcom don't use that exact configuration, but I think they're a player, and they're going to be a huge player in the future of networking.
They're not a player. They just crush a lot.
Yeah.
That's why I'm the world's best moderator.
Yeah, no, you really are. I mean, I've asked you before and you told me that. So it is confirmed.
Yeah. So listen, they were good results. The problem is good isn't crushing it. And, sometimes with the fickleness of this market, it can literally be the day. And Marvell reported the same day as NVIDIA, it probably would have gone up as a reaction. You have to understand the emotion. So then we have to step back and get away from the emotion, get away from the immediacy of how things trade, and think about what is the long-term prognosis here.
Yeah.
Longer-term prognosis is the underpinnings of AI data centers is going to be optical transport and the ability to move data very, very quickly. Marvell has a role to play. Marvell came out originally and talked about having about a $400 million expectation, I think, for the year. I believe that's what they said. And this quarter, they showed a run rate more like 800 million. So they actually are showing a very stable growth in revenue around its products that will support this AI data center growth. But what they couldn't overcome was the extraordinary slowdown of CPU and traditional silicon in the data center, where their products and services
exactly
required. So they had actually, if you look at their AI trajectory, it's very good. But you look at their core business, and unlike NVIDIA, which their entire business was AI, they are more like an Intel or an AMD, where they're seeing big fall-offs in traditional compute, and they're seeing significant growth in AI compute, but not enough to turn that directionally in the near term. So then you have to basically make an assessment based upon that and say, well, who are the companies that are over maybe 6, 8, 10 quarters going to really benefit? And I think Marvell, with some level of comfort, can say every quarter our AI number will get better.
Yeah.
And eventually that number will start to offset how CPU. And the thing is we're not at the end of the CPU, but you do have to know that right now what we are is we're in a buying cycle where dollars are being allocated. And when they have a dollar to allocate, instead of maybe 20% going to AI and 80% to CPU, we've seen that literally turn on its head right now. Everybody's
look at, and Dan, also look at what happened with IaaS, right?
Yeah.
So what happens is these hyperscalers buy for a year, and stuff shows up over, right, like 6 months. And if you bought more than you had expected, right, for to get the capacity in, you're going to sit on it, right? You're not going to deploy all of it. So that's the big thing that's happening there. What was AWS growth? 12%, right?
I think it was like, yeah. I mean, best was like in the mid 20s, which is a massive fall
Yeah.
from a year ago. So you've got that. So stick with me. Strength in automotive, 87% of the revenue of Marvell came from data infrastructure, which means they're very, very solidly placed in the middle of the transport of data, which is a good place to be around AI. Companies being well run, it got cost optimized over the last year, meaning it was, the business got right sized. It's delivering on its commitments and its promises, but there is no second NVIDIA. And so the market really wants to know who the second NVIDIA is, and it doesn't exist. Yeah. It just doesn't, it simply does not exist right now. And so if you basically don't destroy your numbers and offer a ridiculous guidance, everybody kind of shrugs it off. But I like where the company sits. I think over many quarters consistently, it's in a good position. I like Broadcom here too for the same reason, Pat. But I think it was a bit of an overreaction. I don't think we can underweigh, the fact that we've got the Fed speaking today, the fact that we've got concerns about persistent inflation, that the economy is not in particularly great shape. We've still got microaggressions with China. We've got, concerns about Ukraine. I mean, there's a lot of other things. And by the way, consumer data is indicative that the second half may or may not be as good as the first half. So there's a lot of other concerns kind of weighing on the market.
Yeah.
I think Marvell did a good job. It just, because doing just good right now, though, it's just we're in one of those markets where anything less than immaculate and amazing is sort of seen as a shrug. And so just keep performing, Marvell. Just keep performing and the right things are going to happen for you. All right, let's keep moving, Pat. Let's talk about not earnings. Can we do that?
I
hate talking about earnings, right? I mean, I don't like doing TV. I don't want to talk to the press. I'm so apathetic about it. And I'm frustrated that you even make me do this on the show. I wish we could just talk about VMware Explore and updates to Tanzu all the time. That's what I would prefer to talk about. Pat, you're not going to defend yourself? You're just going to let me have that one?
Yeah, sometimes when something's so obvious, defending doesn't even make sense,
I've been through that this year.
Yeah.
I've been through that exact thing, actually, continuously.
I know,
all right. So I'm going to be kind of broad on this. I know you like to geek out a little bit more than I do. So I'm going to basically say for me, there were three themes of VMware. One, it was the company is, actually 1 and 2 go together because it's about the combination of Broadcom, its leadership, and its vision. The company actually had a very strong keynote, which I was concerned about when we'd kind of had some of the internal briefings because it was very hyper product focused. But I thought that the keynote was actually well delivered and hit on some very important high notes. Yeah. Having said that, Hock Tan's presence, the visibility of Broadcom VMware, it felt to me for the first time that VMware was truly acquiescing to the fact that this deal is getting done.
Yeah, it's like this is a done deal.
This is a done. I just think whether it was the way they presented products, the safe harbor statements that were hyper emphasized, which they have to do, but the amount of emphasis on it was unique.
I've been going to events for 30 years, and that is the longest statement I've ever heard in my entire career.
Yeah, it's usually like it gets flashed and they go on with it, but I mean, they were very clear that look, this is kind of how we're developing. If VMware remains an independent company, this is kind of the roadmap we're on. But basically, we have no idea if this is how we're going to continue. And that's the bottom line, is because under Hock Tan, you can absolutely be sure just by looking at his track record of acquisitions that he is going to be very bold in looking at the company, looking at its products, looking at its services, figuring out how to optimize, maximize, create efficiencies. This is his playbook. So of course, I'll never speak to anything, that we would know that's specific. But what I would say is just generally speaking, his playbook and the VMware's current playbook, VMware's probably too broad, has too many products, too many distributed focuses. They have too many things. They're moving slowly, needs more focus on a few of its best products, maximizing the margins and doing it with probably less headcount. And that's just, like I said, that's the playbook. But this deal is getting done. I just absolutely left the event more sure than ever. And obviously having the U.S. The U.S. Regulators basically walk away, decide to not pursue anything, was probably the biggest news of the week. Because the U.K. we kind of knew, they decided, and then it went official. But the U.S. one, everyone was waiting on, and that was because the U.S. has been busy trying to litigate everything that's bigger than like $10 billion. Lita Khan apparently decided this one's going to go. The other thing I wanted to talk about was AI. I wasn't quite sure how VMware was going to talk about AI, and I thought it did a really good job. Besides bringing Jensen on stage, which every company does now, because is there like a rule you're not really an AI if Jensen doesn't come out? And then you're not really an AI if Jensen doesn't come out and present you with a GPU, even if it is a gaming GPU.
I know, man. It's basically kiss the ring. That's what this is about.
But in all serious, like, what was he supposed to do with that RTX?
I don't know. You can't run any AI anything on it. So, but by the way, it almost amplified we can't get any H100s. Right?
I can't even give you like a fake one on stage.
In my head, it totally backfired. I'm like, proof positive, you can't get H100s.
But didn't even say on the stage,
one.
You can't get H100s? Didn't he kind of made a joke about it?
Yeah, he did, which, yeah.
But I do think that the VMware Private AI Foundation, which is its services to, basically enable private data and generative AI in a single stack, sounded compelling. Ecosystem, infrastructure partners, software stack. It seemed to have all the pieces. It seemed to be well thought out. And, the weird sort of bringing our lawyer on stage thing, that was probably the worst part of the keynote for me. I didn't really understand what they were trying to do there. But I think what they were basically trying to say is that large enterprises are going, especially in regulated industries that run hybrid architectures, are going to have a load of complexity about trying to do generative applications and run generative tools in their business. To have a offering that's hybrid, that focuses on data privacy and security and allows for prem, is going to be important to those companies. And I thought the company, like I said, did a good job at, obviously having all the parts, pieces, the GPUs and DPUs from NVIDIA, and, partnering with the likes of Dell, HPE, and Lenovo on the hardware side to enable prem and cloud and private AI to be delivering generative tools. So those were my two big takeaways, was basically they did a good job on AI, which I thought they might fumble, and they didn't. And this Broadcom deal's getting done. So.
Wow, for not knowing quite what to say, you certainly had a lot to say.
Hey, that's why it's called the 610.
No, exactly. Just wait. Sit back, get a cup of coffee, folks. Pat's gonna. No, there is so much to talk about in this at this show. We could probably take the entire show, right?
It costs extra, by the way.
Talk about it. I mean, first off, it's kind of an odd show for me because I'm used to showing up and meeting one-on-one with CEOs, presidents, and the business unit leaders. That doesn't happen at this show, which limits my ability to come to conclusions, because part of my research methodology is to meet with. Now, I did meet with the acquiring company's CEO, Hock Tan, but not with Raghu. By the way, I did appreciate him doing unmoderated NDA Q&A, but there's nothing like meeting face to face to really get to know what's going on. And hey, that's part of my research methodology. It's what I think makes Moor Insights great. So a lot of stuff announced in areas that wouldn't be a shock, just like you said. Increases in multi-cloud and a new on-prem and orchestrator for AI. Not a whole lot about the client stuff, with the exception of automated workspaces. So Let me dive into the multi-cloud part. First, I had to contend with, hey, Tanzu is changing, Aria is changing, and I'm going to have to do a lot of work to untangle that. Okay. I do think that VMware has the best hybrid multi-cloud story that encompasses apps, it encompasses networking, and certain elements of security. It's not taking off financially. I don't understand why. But then again, on the other side of my mouth, that growth is around 30%, which is larger than the hyperscalers. So it is growing, just not adding enough, as many dollars as I would expect. And I'll be honest, I don't have the answer at this point. My instinct tells me it's a go-to-market issue, okay, and it's a sales issue that partners can't punch it through. Their salespeople can't punch it through. And I think that enterprises are contending so much potentially with this new AI burden that it could be an issue. But out of the other side of my mouth, I'll say to really pull off AI, you really have to be an arbiter of multi-cloud. So I need to get underneath that. I especially liked the end of the multi-cloud section where they talked about the capabilities, and it's like, oh, it's all rainbows and unicorns, right? I love that. Their president is a great guy in terms of how he can deliver this message. But I think it's a go-to-market and sales execution issue. That's the only thing I can place. Now, things like NSX don't have all the capabilities that these enterprises needed for multi-cloud. That's where NSX Plus comes in to the stage. I also thought it was interesting that just how deep the company is getting into ransomware, which is interesting because if you look at Veeam, Cohesity, Haiku, Dell Technologies, right? They're now competing with many of the folks that they partner with, right? But let me move to AI here. Dan, like you, I thought the story was one of the best ways of showing how complicated it's going to be to get your on-premise or private data infused into generative AI. And I really liked the discussion between the difference between what they call predictive AI, which is essentially high-end analytics, ML and DL, versus generative AI. But one thing, again, the story is great. I thought what enterprises do need to fully understand is that it's not just putting a customer service chatbot out there and getting access to public data. You got to combine marketing, supply chain, sales, HR, legal, R&D, customer experience, manufacturing. It's the ultimate connecting the front end to the back end. If you really want to do what enterprises want to do. And if you think about the companies, let's just say 75% of the data is on-prem. Does this drive people to put all their data into the cloud, this type of data? Or is this going to be a boon for on-prem? And I don't have a definitive answer yet on that. First of all, I need to know how many GPUs NVIDIA is actually going to send to enterprise. So if you don't send GPUs to enterprise, not only can you not do inference, you can't do training. And yes, the big companies with the proprietary data are going to do training on-prem. The chief legal counsel going on stage, I thought the timing was off, which made it a little bit off. But I did like the message, right? Which was, hey, you've got private intellectual property, you've got private data, and you need private access. How are you going to work with all this in generative AI land? Finally, and I'm going to breeze over these because we're running out of time and this can't be the 650. Two main offerings. First one was an open architecture that they specified. Now you can't buy an architecture, but it's a framework for everybody else other than NVIDIA to come in and add value. Okay. But the second thing they did is, like you said, they rolled out Jensen, and there is a VMware private AI foundation with NVIDIA, okay, which essentially is more of a prepackaged, pre-tested, it works. It's leveraging not only NVIDIA hardware, but CUDA, but also, and I think even more importantly, the libraries, the frameworks that come in there, that come along when you have NVIDIA. So with NVIDIA kind of means to me that they're opening the door to, with AMD, with Intel, with Grok, right? Somebody like that. Net, got a lot of work to do to figure out everything. There was not a date for delivery for private AI, not even a year. And I think, Dan, this might lead to or connect with what you talked about related to the disclosure at the beginning, right? Are these announcements real? Could they be reversed in 6 months? We'll see. And again, I'm not trying to spread FUD here. This deal is going to go through, but with a gigantic statement like that at the beginning of the show and not having dates for private AI, you got to wonder.
Yeah, I just think everything's a little bit, you know what I'm saying? It's like,
yeah.
And until it's not like, it's going to be like, I'm just trying to give people a reason they have to turn the video on, you know, like you got to turn on the video. Cause if you saw what I just did, it was awesome. It's one of the world's best moderator. Okay. That joke's going to end here, guys. I'm not saying it again because I'm not. I'm like top 3 though on that list that I game. All right. So anyways, let's move on. 5th topic. It's a little bit more VMware, but Oracle had to get in on the action. So they got in on the action around VMware Explore.
Hey, thanks, Steven. Thanks, buddy.
Hey, turn him off. I don't want to see that.
All right. He's gone. Bye, Steven.
Hide it.
See you later, buddy.
Hide it.
So more VMware. So first of all, what is VMware Cloud Universal Program? The program is essentially, it's a subscription program, i.e. as a service, that you can purchase credits and be used everywhere across VMware's multi-cloud portfolio. That includes all their multi-cloud services, but also aligns with AWS, Google Cloud, and Azure. But now Oracle Cloud, OCI, is part of the action now, right? So you can subscribe to Oracle Cloud VMware solutions as a part of VMware Cloud Universal. So it allows on-prem customers to migrate, right, on-prem VMware into the cloud, essentially using existing skills, best practices, tools. Think of companies like FedRAMP, where this would be a giant, there's different classes. And I think this meets class A of FedRAMP for compliancy purposes. But Oracle, to their credit, rolled out a bunch of customers, right? Cybereason, Atos, Telefonica, TIM, Aya Bank, San Jose Water, Maxims, Prophecy International. And these folks cover, finance, telco, retail, manufacturing, government, who have gone all in on Oracle Cloud VMware solutions. Big picture, net, this is my bow here. This is yet another proof point that OCI, Oracle Cloud, competes in the big leagues with the IaaS folks, AWS, Azure, and Google Cloud. That's it. That's all I got, Dan. You sleeping? You doing email?
Oh, no. It's just, I'm so used to you droning on for 8 to 10 minutes on a topic that when you hammer something out this quick, I'm completely at a loss. So,
yeah.
Look, we've talked quite a bit about this, about Oracle, and, Oracle's getting in the game. They're getting into the game with the right technology on the right platforms, and they've kind of continued to impress in that way. It's Oracle plus VMware. It's scalability, performance. It's basically giving, the right levels of control planes, and it's giving the people that are, remember, Pat, Oracle is the fastest growing cloud right now.
Yeah.
I know. Hold on, everybody. Say with me. It's the fastest growing cloud right now. Now, law of large numbers. It's not the fastest growing by total amount of revenue growth, but it is by a percentage basis, the fastest growing cloud. It's, seen a few very, very good quarters. But the one thing that Oracle, while they've really shored up their capabilities, Pat, is always going to be about services.
Yeah.
So tying into VMware is going to be important to it. So this tie up is one more that's going to, what did you say to me the other day? We were talking about some product. You're like, I want to take every objection off the table.
Yeah.
And VM, having all the right partnerships, if you're a hyperscale cloud provider, having the right services is taking objections off the table. So I don't want to give Pat's secret sauce away, everybody, but Pat's secret sauce is he never leaves a meeting with an objection. And so everybody wants to buy, because that's why I may be the world's best, but he's the best salesperson I know. So
all I know is I crashed and burned in my first sales job. It was my first job. And then I don't know. I think I'm a pretty good salesperson.
So, a personal anecdote is, after having a record sales year, winning every award in a company, making the biggest bonus check out of any, I was like 24 years old. I went chest thumping into the CEO's office to demand a raise. And he pointed to the door. I can look at that now and laugh, but I didn't think it was funny at the time. But you know what? Just being a great salesperson is not enough. There's a lot of other components to make you great. It was one of the career inflection points for me, though, when I realized that, ego sometimes needs to be checked at the door.
So this isn't about you, right? We are talking about Oracle Cloud, right?
No, I'm totally digressed into some personal thing, but I was done with
Shocking.
Oracle. I was done with Oracle. So I was just kind of, shooting the breeze because, people want to know about you, Pat.
I don't know. I think they want to know. They don't have to know about you. They can just turn on the TV and your big mug is on there.
That's such a good flex, It was literally really humbling, though.
Your head was bigger than the lectern. It was twice as tall.
Okay, so here's the thing. So have you been to Bloomberg's HQ before in your years?
Because 2001.
You've done a lot of TV. They've got a really cool place, by the way. It's the best experience out of any in terms of broadcast, the waiting area. They've got like a cafe. They've got like every different kind of food you can eat. They got fresh made peanut butter. They got a barista serving coffee. It's a great experience. And they got all these different studios. But when you're going on TV, all over the Bloomberg are TVs that have the what's coming up next. And so literally at one point, I was in the studio for technology when you saw that picture. My face was everywhere. It was like the whole Bloomberg, the whole floor. Every one of the studios had me coming up next with these giant monitors with this big, not so handsome mug on it. So very humbling to literally walk around the place for about 5 minutes before I went on air, and my face was everywhere in the building. So, you know what? It is what it is. Everybody should try that once. All right, let's talk about an IPO. So this was something that actually kind of happened and came and passed this week, Pat. I want to talk about this more rather than me just ranting on about it as our last topic of the day. Let's just have a little bit of a conversation here, Pat. Is there an appetite for an IPO right now? So we're in this weird inflection where the market's kind of done better. We've seen tons of growth in some tech names in terms of growth off the bottom. We've also seen kind of a pretty healthy pullback. We've got prolonged inflation, prolonged expected high interest rates. Homes are unaffordable. Rents are still very high. Cars are still barely being produced, but you can get laptops now. And, ARM, interestingly enough, is set out to go at 60 to 70 billion, which again is almost 50 to 75% premium over what NVIDIA had intended to pay.
Crazy, right?
And here, get this, Pat, it's smaller than it was a year ago.
Yeah.
So it's not growing. I mean, so what is ARM? Well, ARM, basically, creates designs and instruction sets for silicon makers. So, pretty much every company on the planet is using ARM right now, and almost every device that you would use has ARM based components in them. But their business model is kind of interesting because it's not that good. Like their profitability hasn't been that good. Their growth hasn't been all that good. Their category, their CAGR is like 16%. So Pat, I'm going to actually kind of play host a little bit here. I think this is the biggest inflection in a long time to see are we warm for another IPO? ARM is pretty cool. It was obviously on NVIDIA's shopping list, and NVIDIA is pretty cool right now. But is the market ready to pay these huge premiums for an IPO right now just because it's been so long since we've had one?
So I may or may not answer your question directly.
Oh, okay. Come on. Then I'm not the world's best. Anyway.
So the things that people need to understand about the ARM revenue growth and profits is that what was in there is what I consider a failed attempt at IoT. So if you pull out the IoT stuff, their growth is exceptional, right? And there were ways they could have written that off, but ARM ended up taking the brunt of that write-off when, to me, it was mostly a SoftBank thing. I like to look at what they're doing, let's say, in the server market, where it used to be that ARM probably 10 years ago was just trying to get people to use, supersized smartphone chips for servers and storage controllers. And they also didn't really have any leadership over the ecosystem. It is freaking black and white at this point. They have multiple platforms in the way they do that. They built an ecosystem all the way down to consistent boot logging up the stack. Operating systems are there, middleware, applications, and if nothing else, AWS and Apple have shown what you can do with optimized ARM silicon. They've also changed the model where it's not just about the architectural license, right? You can move up and get multiple flavors of the IP, where the company is likely 20% market share in the data center, a lot higher market share in automotive, but not 50%. So the company has a heck of a lot of room here to move. I also am very confident in the leadership with Rene Haas. I've known, I think I've known Rene for 15 years. Gotten to know his management style, not only at NVIDIA but also at ARM. So I'm looking at the growth opportunity, and yeah, I do think RISC-V will take a little bit of a bite out of it, but primarily at the low end of the stack. I think the biggest risk could be how China views ARM and what they can do. But also remember, folks, it takes 10 years to build a software ecosystem if you want to go in and compete. Okay. And I would say RISC-V is probably 6 or 7 years into a 10-year period. And ARM taught the ecosystem how to move off x86 and move to something different. And RISC-V is able to take advantage of that. So we're gonna have to see what happens. I'm very optimistic about this, and all of semiconductors are down. So why would we expect ARM to be up, right? In 2020, like massively up. The only companies that are massively up is NVIDIA, right? And Lattice, right? And
Lattice in the semi space. Yeah, that might be true.
ADI, right? Doing well too. So there's a lot of people doing not as well as they could be, and we shouldn't expect ARM to be any different.
But the timing is important, right? So they've decided to do this now. And like I said, they're year over year down. I mean, you cannot underestimate the impact for SoftBank that they've been trying to sit on this after just monumental stupid from Masa. I mean,
Masa.
Between WeWork and some of the other things, though, I mean, the Vision Fund has just been hammered. This is one of the better assets right now, Pat. But you got to be pretty clear. I mean, it's hard to go public when you're not growing, and it's really hard to convince the market to pay a huge premium when you're not growing. Having said,
well, I got to tell you, 70 versus 40. I mean,
no, I mean, it's a great story if they can get it. But I'm just saying, like, that's what they're trying to get. The question is the appetite there? I tend to think it will be. I tend to think just the drafting off of its role in these Grace Hopper systems is going to create a lot of momentum because people are going to see that tie to NVIDIA. And of course, Apple, they've got a very strong story. All the Apple silicon is based on ARM. And of course, if Apple gets its iPhone off Qualcomm, now either way, they get ARM, but people will be excited because of Apple. It's just a thing, right? It's not necessarily even strategic. It's just the way people feel. Again, this is going back to the emotions, not the fundamentals. All right. So we've hit it. There you have it. 6 topics: NVIDIA, Zoom, Marvell, more NVIDIA, VMware, NVIDIA, Oracle, and then ARM and NVIDIA.
That was so good.
Thank you. Thank you.
A big smile on my face.
I'm the world's best friend.
Moderator.
I'm the world's best friend.
Yes,
Mr.
you are.
Patrick Moorhead. So, all right, everyone, you heard it here. We appreciate you joining us this week and each and every week. Now, next week, I cannot confirm or deny if we'll be doing this podcast because we may be going really, really fast instead of podding next week. We'll probably find a time to fit it in, though, but we might also be crashing and burning, literally crashing and burning. So, it's a story for another day. If you can't insinuate what we might be doing next Friday instead of podcasting, you might want to
racing.
Watch the
Come
race
on, we're going to be racing
Sunday.
around CODA.
We're going to be racing around CODA.
And hopefully
I'm excited about this because while I've been a car
flames.
fanatic, I've never actually tracked in my life. So,
by the way, speaking of racing, you've got to hit Lando is up on Max Verstappen going into 2P. So P2, I mean.
Is Lando going fast again?
Yeah, he is, but I think Max just is kind of toying with him, so at the very end he can clip him. But
they are kind of like chummy, the two of them.
They are.
I just wonder, will Max still like him if he ever beats him?
Probably not.
Because just a little therapy moment, Pat. But after I beat my dad at golf, he never played with me again. So sometimes you don't realize you think you're chummy until you beat your dad at golf. Anyways. Everybody, hit that subscribe button. Join us for all of our shows here on the 6-5. We appreciate you tuning in. We'll be off at Google Cloud next week. We're going to be putting a bunch of 6-5 episodes live before and after. And then while we're there, we're going to be paying attention to all the great announcements. So stick with us for now for this episode. Got to say goodbye. We'll see you later.